What's better than earning money from a 9-to-5 job? It's earning money while you sleep, which is made possible if you start investing. You're listening to the Real Estate Investing Demystified with your very own dynamic duo, Ava Benisaki and August Biniaz. Tune in as we discuss everything real estate, both on the passive and active sides. We feature life-changing stories of today's real estate leaders that will help build your own roadmap to success. This is a show that will lead you to a diversified portfolio, a much bigger revenue, and a next-level venture that brings you a smooth cash flow. Let's get this episode started. Okay, welcome back to the Real Estate Investing Demystified. We got our new studio set up. I'm very excited about it.
Well, it's not, I wouldn't really call it definitely a new studio, but it's more, we're back in Vancouver visiting, and we thought about setting up a studio, but why go small? We wanted to go big. So we got independent mics. So we're super professional here.
We feel very cool and professional now.
Yeah. And I can't believe there was so much brain power that had to go into to get these mics working. I had a tech coming over and try to figure these mics to work independently. And it's unbelievable.
Took a couple hours, actually.
But talking about kind of simplifying a complex process and tech and all this great stuff, our guest today is going to be chatting about some pain points that exist in the real estate ecosystem as a whole. And he's got the solution to a lot of pain points that exist, and we're going to go over it. And one of the great companies, a lot of great companies that he's been part of.
I was going to say a couple things that our guest has in common with us. I mean, he's Canadian, okay, but he also is American. Our son, who was born 4 months ago, Atlas, we're so in love with him. He's American, and we're also Canadian.
Yes.
So we're on fast track, hopefully, to get our dual citizenship as well. And another thing that Andrew has in common is that he has launched many startups. Now, CPI Capital was a startup. I mean, we know what it's like to build a company from the ground up. So we're really excited to talk to Andrew, because let me tell you, it's not easy building a company from the ground up.
Absolutely.
And Andrew has really taken on, has done some incredible things.
Tell our guests a little bit about him.
Yeah. So our guest today, guys, is Andrew Borovsky. Now, he is the co-founder and CEO of Visible. It's a cutting-edge fintech company revolutionizing the real estate industry.
Yes, absolutely.
And we're going to dive into everything that he's done. So welcome to the show, Andrew. Thanks for being here today.
Welcome.
Thank you for having me. Yeah. Nice to meet you guys.
Awesome. Awesome. Yeah. I mean, the fascinating world of startups, it's how they come about, ideas, this problem solvers, the disruption they cause in some industries. And we're going to go over some of the parts that we've been involved with. I mean, in our city here in Vancouver that, we've lived in for a long time, but also, some fintech companies that were involved with our company, CPI Capital, front funder and token funder, which are exempt market dealers that allow retail investors to be involved and participate in institutional type of investment. So we've had some
streamline the
investment process. So we've been somewhat involved, hands-on. The CPI is, I wouldn't really call it a fintech company; it's more of a real estate private equity firm. But I've always found this space fascinating. So we're excited about our guest. And I think also, one of your friends has...
One of my good friends, Jillian Hellman, she's a CEO and co-founder of Realty Mogul. Her and I had a really fascinating conversation over dinner in Miami. We spoke for about 2 hours, and it's just such an exciting space, the fintech space. So we're really excited to learn more about it, Andrew. And
awesome.
So let's start with some of the questions that we have for you today. Let's talk to us about the inner workings of your brain when you realized that there was a problem and a pain point in the industry, right? So did you go out there looking for the problem, or has the problem kind of revealed itself to you through your experience in the business? Like, talk to us about how everything came about.
Sure. Yeah. And I think it's interesting you say that, because a lot of folks ask this in terms of, just to start us more broadly. It's, there's people attracted to the idea of a startup. There's people attracted to the idea of solving a problem. And I always kind of try and steer people towards that sort of the latter, because there's actually a fair number of people that start companies first, and then they go searching for an idea, and that's very, very challenging. So ideally, the idea finds you first, and you build the company. And the best ideas are usually occur to you in your kind of day-to-day life, right? Like it's you stumble, there's something frustrates you about something you were trying to do, and it could be something super benign. There's people out there building vacuum cleaners, after they're frustrated with the vacuum cleaner that they bought. And other people build, financial technology companies because they're frustrated about some transaction that should have been very simple and became very complicated. So I think everything that I've been interested in has been just firsthand problem I've experienced, and I felt like it shouldn't be this way. And I think some of the best companies out there all start the same way.
Yeah. And I mean, you started your start was in startups, and to give us a little background there on or tell us about your start and go ahead.
Well, it's actually because you guys are Canadian. I can go a little further back, and I could say, I grew up in Toronto. My interest in sort of technology was actually primarily driven by animation. So I wanted to get into special effects.
Cool.
There's a great college in Toronto called Sheridan College, which is famous because it is one of the greatest classical animation schools in the world, and all of the best animators at Disney. Disney traditionally hired all their animators from Sheridan College. And so if you're in Toronto and you're kind of interested in whatever fine arts, if you're interested in animation, that tends to be where you go. I think I applied like 4 times, got rejected every time.
Okay.
Because you really have to be an incredible, fine artist first. And I was just better with computers. And so at some point, I shifted to, okay, well, gotta go to college, gotta go pay for it. And that's actually when I moved to New York. So I applied to a school in New York, moved away from Toronto, and then just I couldn't afford college, so I had to go get a job. And this was 1999. It was very lucky because it was the rise of the .com, and so anyone who knew how to build a website could make a decent amount of money. And so I kind of stumbled into it, like just trying to do this, and ended up doing something else. But then just is something that came naturally to me. I enjoyed doing it, and I was very fortunate, to land at a couple of really great companies doing what is now known more broadly as product design, but at the time, like, it was a vertical that was just in its infancy. Effectively, there was not a lot of opportunities. This pre-iPhone, pre-App Store. It wasn't easy to like design software in the early 2000s. And so these jobs were far and few in between. And if you knew how to do this, how to design effectively computer interfaces, you could make some money. So that's kind of where I got started. And then I caught the first the .com wave, and then I definitely was very lucky to be, luck is half of everything, right? The second wave was really the iPhone. Like once Apple launched the iPhone in 2007, all of these opportunities became available to people again that had experience in interface design, in particularly in mobile design. A lot of stuff moved to the cloud. And so I was very much working for large companies, Adobe, Apple, first half of my life, before switching to entrepreneurship about now 14 years ago, but 2010.
Yeah, talk to us about some of the companies that were in. Was any of the companies in startup phase? I think you worked for Cadre, which we're somewhat familiar with, which is a fintech, real estate, private equity, kind of all of it combined company.
Yeah, so we started a company first in 2008, which was basically in the mobile space. We sold the company to Square. Again, very fortunate, like at the right time. Square was in its infancy. I think they were a Series D company. So, it was like probably 4 years before they went public. So that was great. It's one of the greatest startups of all time, I think. Certainly home to just some of the most talented people. There's so many people that are ex-Square that are fantastically more talented and more successful than I am, I should point out. So it's just,
but some of them currently work for you, don't they, at your current venture?
Some folks, yeah, but there's some great companies, right, that emerged from it. I mean, a great example is a company called Fair, you may have heard of, but and that's an ex-Square group. I mean, there is a notion now of a Square mafia. And so, anyways, my point is
the PayPal mafia.
There is a Square mafia. Yeah, it's been written about, to some extent, but I'm not mentioned actually, which is, I was doing some other things, but the thing I'm trying to highlight is just give me an opportunity to be around some of these incredibly talented people, be somewhere very, very early stage. And then I caught the bug and I'm like, okay, I want to do this like over and over. And of course, Square is fundamentally about payments, right? And so I learned about how the banks work, how payment networks work, and all this plumbing, but it's money is the blood of the economy, right? And so you through knowing how that plumbing works, you exposes to a lot of these other things. And so to your point about Cadre, after Square, I had this opportunity to join that company. It's basically a tech-enabled real estate private equity firm. And but to me, it was like 2015. I was like, I've never even been close to somebody that worked in private equity, quote unquote. And then all of a sudden I was told about this world that most of the world's assets, are not on public exchanges, that most of them are private, they're completely illiquid. The wealthiest people invest, in things that most people can't even dream about. And I just love this kind of shadow world, but at the same time, it's massive world, right? And I just wanted to go deeper and learn more about how that works. And again, from more of a technical standpoint, but that was my foray into Cadre.
Wow. Wow. What an incredible story.
Yeah, that really is.
Amazing. Amazing. All right. So I guess let's talk about Visible. And we love to make the connection between Visible. I think there's a bunch of different companies that are either currently being built or that you have plans for, but kind of talk to us about Visible.
Yeah, give us like an overview, like who are you guys? What problem are you solving? Maybe your long-winded elevator pitch and business model would be great.
Yeah, it's a very, I think hopefully I could make this pitch very simple. So I got together with folks, some of the best people I worked with. So some folks that I originally worked with at Square and some folks I worked with Cadre. So it's like, the team is everything, right? You want to work, especially in startups, you want to be with people, right, that you enjoy being around. And the problem is really at the intersection of the stuff I've been working on, which is payments and real estate. And the pitch is very, very simple. Fundamentally, all processes, kind of financial processes related to real estate, have not really, changed since the 50s, frankly, right? Like I was going to say 50 years, so it's more like 70 years now, right? Where again, you guys are new to the U.S., but I mean, look, it's like that in Canada too, to some extent as well. It's a little bit more centralized, but these simple things, right? On the one hand, you have real estate, your home. Right. If you're average Canadian, that's their most valuable asset. That'll be the most valuable asset they own their whole life. And yet, if you think about all these processes, buying, selling, investing, borrowing against, maybe fractionally investing, even monetizing rent, we're going to talk about that for a sec. All of those things are just really, really complicated. And fundamentally, actually, there's three things that I kind of focus on: speed, they're slow, expensive, and they're complicated, right? So the idea behind Visible was broadly, let's look at all of these transaction types, understand why they're slow and expensive and complicated, and try and fix it from kind of a first principles thinking, right? And so some of it is like process innovation. Some of it is literally just writing some software that fixes some things that like kind of get in the way. But yeah, it's a big problem space, which I love. But if you look at it more broadly, the idea behind Visible is look at it more broadly, build a foundation, which we'll call kind of a financial network for real estate. If you build that, then you can start enabling these use cases one by one. And that's why our first product, I mentioned rent as a use case. Over like half of all rent in the United States is collected using cash, which is an insane statistic. So we're like, okay, let's go build something to fix that. And that's an example of
why choose Rent app from all the other services? I mean, I believe there is the title services one. You're talking about mortgages and what have you. Lot of
it's a great question. It's a great question. Yeah, I mean, it's really, as a startup, also kind of going back to like how do you succeed, right, in a world where most startups fail? You got to pick your battles. I think if you look at, we're building the bulk of that product last year, 2023, which is characterized by having very high rates and very expensive real estate. And so if you compare transaction volume and broadly real estate, let's say buying, selling, even home equity loans, not to mention mortgages, right? Compare that volume in 23 versus 21. It's just very, very different. And what happens is, right, again, because the industry is so old, it's very risk averse. So when we evaluated, like, for example, let's innovate in the home equity space, right? Just purely like, I want to take out a loan. What's home equity? Very simple thing, right? Like, I own a house. I want to take out a small loan at a decent interest rate so that I can renovate my kitchen. Well, a lot of banks were not doing those loans in 23 because of just, I mean, I can rat on this forever, but basically, it's based on the value of your home. If every bank believes that the real estate is, the real estate is overheated and is imminently going to collapse, well, they're not doing loans because they can't get the value right. They can't underwrite it the right way, so they just don't do those loans. So if we as a small startup were to spin our wheels trying to build a home equity product, we just wouldn't get anywhere. At the same time, what's great, what happens, right, when the real estate kind of transaction volume dies down, well, if you can't buy a house, you're going to rent, and if you can't sell a house, you're going to rent it out. And so yeah, kind of parallel to transaction volumes going down, home ownership going down, the opposite of that is also true, which is rentals go way up. And so I think we really, it's really just like that. That's the calculus. But it's a good time for a product like this. Yeah.
Yeah, that's incredible.
Yes.
That's very smart. When did you launch Rent app?
Just a quick question though. I mean, just touching on that still. So you basically were picking and choosing the cycle of real estate you want to be in. I mean, we know that real estate goes in cycles.
That's a good way of putting it.
Recession, recovery, expansion, recession, recovery, expansion, and hyper supply. So you felt that you were in that expansion hyper supply phase, that's not the right phase to be able to launching a mortgage app. Rather, a rent efficiency would be a better time to get into it.
Precisely,
He's like, everybody's being priced out of being able to afford a home right now because interest rates are high. Everything else, they don't have any other choice but to rent.
Exactly.
Love it.
So we launched it. I think it's something. I mean, I think it might be like 100 days today or something.
Nice.
So we've been, so in our head is like, so it's effectively January 1st. And so we've now, we're at April 9th today. So we've had 4 rent cycles, right? So we've collected rent 4 times. So it's a very, very new, brand new, I should say.
But it's functioning. It's functioning. It's not in kind of theory stage. It's actually functioning.
Yeah, it's been in theory stage probably since last summer. We've been doing a lot of sort of closed beta stuff, but no, it's up and running, in earnest. We have a partnership with Barstool Sports. They talk about us nonstop. We have a partnership with Bigger Pockets. I don't know if you know those guys.
Cool.
Yeah, they're like a big name, right, in that sort of like landlord, I'd say, space. And so we're investing in those relationships because with fintech, especially, imagine like rent payments, it's big check sizes, right? The average rent's about $2,000. You're not going to hand that over to a company you've never heard of. So we're in this sort of brand building phase right now, which is interesting. So we're just trying to build awareness. And then through awareness, as people become more comfortable with the product, they engage with it. But it's been good. We've been doubling month over month. So I expect that to continue. Yeah.
Andrew, talk to us about how the process works when somebody uses, Rent app. Are you targeting more tenants to utilize the app? Or are you targeting homeowners? Talk to us a little bit about how that
tell us more, because tell us the mechanics of Rent app. I mean, you talked about visible, of course. Talk to us about what it is, what problem does it solve, and all the whole mechanics of it.
Yeah, and this is kind of like how you go about, I think, broadly, it's probably illustrative of how I think you go about trying to solve problems and build companies, which is, we looked at the space and we just collected, some data, right? In terms of like, okay, how do people pay rent, for example? Or actually, we step back and say, what are the problems in this space? And actually, one of the reason I mentioned that is because we were like, are there problems making leases and then like renewing those leases? Are there issues? And by the way, there is that problem. It's just not as big. For example, right? Like, how do you negotiate leases, right? And how do you can you create a product that makes it easier for you to get out of a lease earlier, or maybe to extend a lease earlier? And then like, is there some arbitrage, some negotiation, some price, differences that we can play with in that space? So we actually started there. But then when we kind of went deeper, we found this insane statistic of the vast majority of rent being paid in in cash and check. And it's something like, I mean like 70% of rent paid that way. But we also realized that it's primarily the smaller owners. So if you're somebody like 2 to 3 properties, that's how you collect rent. And that makes sense because, well, if you want it to go digital, you're going to have to adopt some type of property management software. And when you have 3 properties, it's sort of overkill, you know, because these things, they're designed for somebody that owns like 15 properties. And so we found this really nice space with this long tail of owner landlords that really just primarily have this problem with payments. That's all they need to solve. And that haven't really bothered with anything else because it was too expensive or too complicated, right? And so we're like, boom, okay, let's do this. And we loved it too because it's a lot like Square. If you guys, you know, are familiar with Square's story, right?
As a
You
consumer,
know,
but not really the story, but as a consumer.
Yeah. Well, so I mean, that company is built right on this you know, crazy thing, which is like in 2010, you know, there was like, you know, 25 million small, what are called micro merchants in the United States, which were basically actually, yeah, small business. It's a business with 1 employee, right? So a business with 1 employee, which I'm sure you know, a lot of businesses with 1 employee. Well, guess what? If those guys went to the bank, and you like to talk about sort of that aspect of it, right? Like these entrenched industries. If you went to a bank, I mean, I'm sure you've actually tried this. You go to a bank and you say I'm an employee of 1, and like people, you know, they show you the door, right? You're not a business. You can't be a business with 1 employee. And the most basic thing that those people were missing was access to credit card payments. This is 2010. And so Jack Dorsey's big idea at the time was that, okay, we have this iPhone. We built this really small white reader that allowed anyone to take credit card payments. We wrote some software and we enabled this long tail of what are called micro merchants to take credit card payments. And it turned out that there's a lot of them. And that basically most banks pretended that they didn't exist, and they pretended to their own detriment because, you know, Square ended up having like 20 million merchants doing this. And as those merchants grew, Square grew, et cetera. So there's a very similar dynamic with real estate ownership where you have the vast majority of real estate actually, and I'm not even talking about payments, right? 60% of all real estate is owned by individuals, right? We think about this like, oh, Wall Street's like buying everything. They are to some extent, but the long tail is still individual homeowners. It's just that the way that our financial system is built, it doesn't like to go out there and help find all these individuals and help them individually. They don't like, and they don't know how to aggregate this, right? They all prefer to work with the largest owners of real estate, largest landlords, and build tools for those people and build services for those people. And where technology really shines, where software really shines, is actually you know, providing tools and aggregating that long tail. So RentApp sort of does that, you know, similar to how, you know, the Square credit card reader did it in 2010, by creating, again, just a very, very simple, like elegant, free way for people to both pay and collect rent.
Okay, let's break it down. Let's break it down a bit more. So first question I always ask when the topic of startup comes up, particularly in tech, is that who's your competition? Is there another group, another company that's
cash and checks?
Cash and checks. And how about let's talk about Zelle, for example, in the US, or we have like e-transfer or ACH in the US where people can do. How
so we're built on so we're built on ACH. We're a lot like e-transfer in Canada, actually. So what actually you should say this: e-transfer and Zelle are very similar. They're both products built by banks, you know, to compete with basically peer-to-peer payments like Venmo and Cash App. And as a result, they're not super elegant. You know, they're a little tedious to use. They're meant to be kind of, you know, jack of all trades, like master of none sort of product. But the biggest issue that they have is because they're jack of all trades products, and again, it gets into fraud and everything else, the limits are very low. So whether you're in Canada or in the US, the biggest issue you have using Zelle for rent payments is that you have to make 2 payments a month. That's very typical. So you make a payment, you have to wait a week or wait 2 weeks, and then you make a second payment, which people hate. And so it's interesting because Zelle is free and it's instant. But because of this limits problem, it kind of pushes people back to checks and cash because it worked, right? And Zelle is the best, the most successful of all of the digital payment services, and they still account for under 10% of the market, which is shocking, frankly.
Wow.
Yeah, and so what we add on top of it, so we're free, like Zelle or e-transfer. We have high limits, so you can send your full, big check if you're living in a really nice house in Naples. You can pay your rent or collect rent using us, unlike anything else. Your other option would be wires, effectively, but they're not free. We support auto pay. It sounds really stupid, but it actually, there's no products out there that allow you to just say, move money from my bank account to the landlord's bank account on the first of every month. And then the final kind of, icing on the cake is we build credit. So it's, really important right now for renters, as renters are renting longer, and you're worried about, how you're going to buy that first home. And look, the biggest payment you make every month, you don't get credit for. It's insane, right? Yeah. So we, so we created integrations with the credit bureaus, and it's very simple. If you pay using RentApp, using AutoPay for free, you get free credit reporting. And it's a very big area right now. By the way, there's companies like Self, maybe you've seen, like they're massive. So there's companies out there that will just charge you $10 a month just to report, not pay, but just to report that you pay your rent. With RentApp, you get it for free.
How difficult was to get that with the credit bureau type of institutions?
Difficult.
I bet.
Difficult. They're to their credit, I mean, they've really opened up to this, right? I mean, they now accept rent payments, even bill payments. They've now, electricity payments, they now accept as a form of contract, right? That you're paying on time, quote unquote. That's how they count it. But as you can imagine, right, their verification piece is really important here, because, they don't want people to fake this type of stuff. And so, it's like the process to get certified by them so that you're moving data and the data is verified to be like actually, properly formatted, et cetera, is a fairly long process, and it's a separate process with every agency. So to get all three is really hard.
Does it build your credit to just pay, or does it build your credit to pay on time and not get dinged by the landlord? How is that? How is the credit?
Yeah, it's a great question. It's in its infancy. So right now we report successful payments. It's rather simplistic, like, definition of it. It's probably going to get more sophisticated over time. Again, it's up to the agencies. But right now they're looking to us to report, okay, is there an auto pay? So is there a contract, quote unquote? And is that contract being paid, regularly? Yeah.
Got it.
That's awesome, Andrew. I love that. So it incentivizes renters to use the app.
Yes.
How about sellers? What incentivizes?
I mean,
sellers?
you mean landlord, not seller.
Sorry,
landlords. Yeah. So this is really, I think, for us, again, like the kind of the key to the service. Everyone that's tried to build anything in this space, they've tried to acquire the landlord. It's very difficult trying to acquire think about it, right? There's like 11 million owners, these small owners in the United States. If you try and get them to use a new piece of software, most of them are over 50. Try and get them to use, it's like being a door-to-door salesman for like Salesforce. Imagine, the speed of that distribution channel, right? Like, it's really tough. So what we rely on is we target our product entirely to the renter. So we acquire renters, which 80% of 25-year-olds in the United States rent. So it's very easy. If you grab a 25-year-old guy or a girl, they're probably renting. And we say, use this product to build your credit. No brainer. It's free. So they recruit the landlord.
Nice.
And the way that it works is they send a payment to the email address or the phone number of the landlord. The landlord gets this beautiful, receipt. We took some of those cues from Square, and the receipt says, Andrew paid you rent. To accept it, type in your routing and account number.
Okay.
Yeah, and that's it. And so what happens? They do it, and they can also use Plaid to connect it. So they establish this connection between the two banks, and then they never have to do anything again. They don't have to download anything. You don't have to create an account. You never have to link your bank account ever again. If you have other tenants, they'll automatically go to that same bank account. So you just accept the payment once, you set it and forget it. So you know, if you look at that demographic, like most of our like customers on the landlord side, like I talk to I talk to a landlord a day. They are either playing golf or or at least want to be on the beach. And if you know, because that's the image, right? I have rental properties, I can like retire, I can have generate income. And we really let them do that because the way the service works is like streaming money rather than having to like check your Zelle balance, you know, like whatever every month, or deposit checks or deal that stuff. You make this connection once, the money just lands into your account and you get notifications when it happens. There's nothing to do. It literally is passive income, like in software form, which I love.
That's amazing.
Yeah.
That's amazing.
Is it fair to say that you're basically getting the tenants who are your main clients to behave as affiliate marketing kind of agents for you, and their perks? Their perks are streamlined process of transferring rent and the fact that they're building credit, that they're getting those bonuses, and they're
and we're working on a couple other things. I mean, there's a lot of like these kind of rents. You know, now that we go deeper into the brains of renters, we realize, you know, there's a lot of things you do on a month-to-month basis, you know, that are very interesting. We have a lot of people asking us for flexible payments, for example. Like a lot of people have, you know, I mean, again, you probably remember yourself. I remember myself in my early 20s, right? Where you're like, you know, you didn't get paid like on perfectly, you know, a day before your rent was due. And so there's a lot of people looking to split their rent into 2 payments, like pay on the 1st, pay on the 15th. So that's an interesting space. We now have a lot enough customers that people are like, hey, what if we did this? And so we're like in that fun phase where you're like adding things to your product, because people are asking you for it. Yeah.
I love that. And also the sellers are probably talking to their
landlords.
I keep saying sellers.
Yes, you're too
They could be
involved
sellers.
in buy and sell.
But the landlords are also talking to their friends saying, hey, there's this new app, you know, you gotta get your tenants to pay for it. But let me ask you, Andrew, like, where is the incentive for rent app? Like, how do you guys make money?
Yeah,
like, it's free for the landlords and it's free for the tenants.
But let me just give a quick backstory on this particular question. Is that when we first started CPI Capital, majority of the profits in real estate private equity is made on the back end, is basically through promote or the carried interest. So I have a very close relationship with my mom. She was one of my first investors who invested with me, and what have you. And when I was trying to describe the business to her, she had a very difficult time kind of understanding that, okay, so you're going to be putting all this money, so you get this acquisition fee that you're explaining, but to build your company, you've already incurred costs that are much more than the acquisition fee, and you're not going to get paid for another 5 years till you sell this property.
Like, this absolutely does not make any sense.
And then you get a percentage. Like that makes no sense, because kind of the older mindset, their different generation mindset is you do your work and you get paid today. You have taken this to and this is listening kind of on some content that was online before our show. We were researching about you, and we heard you talking about this, but about how are you guys making money when the service you're offering is absolutely free and is incredible, and there's so much work and resources and brain power and organization that has gone into building this. I don't think anybody could have done it if they didn't have the experience you had. I think it was just what has happened is preparation meets opportunity. With your background and experience, you were able to come up with this idea. It's not an easy venture, but talk to us about your grandiose future plans of how to make this profitable. And then we're going to get into investors who are investing with you and how to convince them of this. But yeah, I would love to hear this part of it.
Well, first of all, I just want to say I'm at my mom's house in Toronto right now, and she asked me that question. So you're telling me you built this amazing piece of software that lots of people use and no one pays. So
she's like, she's probably like, at least charge $5 per transaction.
Yeah, trust me, she would understand private equity. She would just not understand this. But no, look, it's a venture-backed business, right? Which is that kind of classic, you know, I think we talked about Uber very briefly, right? This is the kind of business that, you know, in order to get scale, you do need capital, and it is easier to do this. It's a very difficult to bootstrap business. You ideally raise some money so you can kind of you know, offer things, build some exciting things and offer them, you know, at a sort of discount effectively, you know, for some time until you find, you know, other sources of revenue. But in this case, the good news is, so the core rent app services will always be free. And the reason for it is, you know, almost as a payments guy, and I'm, you know, briefly kind of parrot Jack Dorsey here a little bit, right? And he's always talked about the fact that transactions should be fundamentally free. It's one of the reasons why he's so obsessed with Bitcoin. Bitcoin transactions are not actually free, but they're at least they have the capability of being free. But I kind of believe that, I think our first principles thinking here is transactions should be free. The good news is in the US, moving money over ACH rails is actually not that expensive. I mean, it's pennies effectively, right? It's not credit cards. If we were running this on credit card rails, right, would be done in about a month. So it's actually like a fairly low cost business to run, and to offset it, you just need to add a few other sources of revenue, primarily for premium features. So there's things like instant payments, right? Right now, money settles in 2 days. If you look at, like, for example, Venmo and Cash App, I was a Cash App before starting Visible. That product we ran at a loss for like the first 4 years, and then we turned on instant payments where you can get the money the next day, or you can get it the same day, and for same day we charge to this day 1%. That's how Venmo and Cash App, that's how they make money. That's how they pay for the free service, right? So I think with RentApp, it's the same thing. There's like opportunities to go, okay, well, do you want more, right? Do you want things? It's usually like, do you want them to go faster? Do you want like more optionality? Also, like, I love real estate. Just real estate is so awesome, right? Just on so many levels in terms of just broadly, right? Just a great way to build intergenerational wealth. But as a result of that, there is a lot of opportunities to extract value beyond sort of transactions and like beyond taxing the transactions, which is what a lot of people do. And so for us, for example, like lending in real estate, it's really interesting, right? So every single landlord that joins us right now, we're giving them free rent payments that are super, super convenient. When they go to buy their next income property, we'd like to be there with a loan for them, and make that seamless, right? One click, no transaction costs. You just pay interest, on the loan. You can do similar things on the renter side. You can kind of monetize, somebody lost their job and they need to kind of hold over, for a month. You've all probably been there. I mean, I've been there. Right now the recourse is to go to like a predatory loan place, get a payday loan, 600% APR. We could have a product that, like, for a few bucks sort of like helps somebody, be late on their rent. So there's lots of opportunities. This is just in the rental space. But I think broadly with Visible, we want to kind of tackle all sorts of things. We want to go out there, and help sellers and help buyers and enable fractional investing. One of our investors, so we're backed by Thrive Capital in New York and Coastal Ventures in California. And Vinod Khosla is a prolific investor, and he's really, like, he talks to me about this all the time, which is like young people are having a really hard time owning real estate. Going back to that, it's the greatest source of intergenerational wealth. So how do you get people into real estate when it's so unaffordable? And the answer is fractional investing. Going back to your friend, right? You guys had lunch for Realty Mogul, right?
Yeah, that's correct.
Yeah. I mean, it's like that thesis is we've struggled for, not because it was a bad idea. I think it's just because, again, the regulatory environment, entrenched players in this are really, really tough. But the idea, I think we're pretty close to the idea that, like, our children are probably gonna inch their ways towards ownership, probably through fractional ownership. So that's a hugely interesting area to us as well.
But how do you, Andrew, how do you connect all of these? Because RentApp itself it's basically the catalyst to build this ecosystem, to bring people in and get them used to using this software, and then eventually introduce more product. Will those products be hand in hand? Will they service a broader demographic and clients, or will it be mainly the people who already use the first, like that kind of, masterminding that part and putting all of that together and kind of architecting that part of it, of what comes next? I'm sure you've spent a decent time on that. What should come next? How do you figure that out? How do you say what comes next?
I'm going to use a very cliched example in some ways, but what's nice about cliches is, like, everyone's familiar with them and everyone can understand it. So the cliche in this case would be Elon Musk and Tesla, right? So yeah, everyone, but, like, really, he wrote down a plan, and he said, this is how I'm going to do, XYZ. And he created the Roadster. He said, I'm going to build a very expensive car. It's going to be the Roadster. A bunch of nerds are going to buy it, for $200,000. And that's going to fund the first phase of our company. And we're going to take all that money from selling Roadsters. We're not going to sell a lot of them, right? And then we're going to build like a nice sedan, which will still be expensive. And that was a Model S. And they said, okay, we're going to sell that to like the next generation, like not the hobbyists, but like, suburban parents are going to buy Model S's because it's going to be like this really nice car, and then we're going to take the money from that and we're going to build a really cheap car, Model 3, and that's going to be the mass market car. I mean, he said that's what he will do, and that's what he did, and it worked. And I just want to I kind of want to point everyone to it and say, like, there it is. Like, that's how you do it. You find your beachhead. You can't possibly be everywhere at once. You find your beachhead. You establish it, you monopolize it, dominate it, ideally, that particular group of people. And then you use that as the jumping off point to the next one, right? And that again, what I'm saying should be so obvious. So for us, it's like kind of the same basic theory, which is let's own, payments for small landlords. That's half the real estate market in the United States. The real estate market in the United States is the most robust in the world, the most sought after asset. And then we'll use that to build, is it Rent App Pro, or is it, we own like Borrow app, like, we have all these other apps kind of in the wings waiting. So it could be something completely different or connected. You don't always see the connections yet, but yeah, generally it's just like, you build until, this critical mass point, and then hopefully you shift. And every time you shift, you can make the wrong step. So there's a lot of risk in that, but yeah, it's sort of, yeah, that's it.
Amazing.
Andrew, Rent App is predominantly in the United States, right? Or do you have any plans of
all
expansion to
US.
Canada?
So it's interesting. I mean, it's just like, it's silly reasons, right? For why people go and don't go in different countries. Canada's very small. The reason people build in the US, right? Or like the reason people build in the US and they don't build in, say, Denmark or even the European Union is we just have this amazing, massive 300 million person market with an amazing real estate market behind that. And so this is the natural place to start everything. So the reasons for going to Canada have to be really good. Like and I have the same questions on Australia. In Canada, you do have e-transfer, but it has these issues that Zelle has, which is, you have to split payments. I think there's an opportunity to do something there. But going back to this, like, how do you, determine what your next step is? I don't know if going through I'm roughly speaking, from a 300 million consumer market to a 30 million consumer market is like, I'd say, the top priority for any company.
Yes.
By the way,
Absolutely.
as a Canadian, like, that tends to be the issue. That's why Canada is run by like 3 corporations.
100%, 100%. And one more thing is that the US has the highest rent to value ratios in the world. When you compare the rent to the value of the property, the US has, as far as I've researched, I haven't really found anywhere else in the world.
Yeah.
That
No, I think the
higher.
opportunity in Canada exists. It's just like, there has to be a really good why. Yeah.
Yes. Amazing. All right.
Are we on time?
We are on time. Let us get a couple of quick things here. I want to talk to you. I mean, we talked about Uber a couple times. Let's talk about kind of pushbacks and hurdles that exist in the space. And that's, you were talking about disruptions coming into industries here with the Rent App. I don't foresee any of those difficulties. But as this ecosystem grows, and then you're talking about going into other spaces, you're talking about even lending, talking about predatory lending, but having these connections with the renters and the landlords, you could be able to offer them better debt. But you're also talking about as far as like title insurance or other services that are provided through the transaction of a property. A quick story about Uber. When Uber came here, was trying to come here in Vancouver, it was already available in most metropolitan cities around the world. Vancouver, there was a big pushback, and that was being done by the taxi cab lobby that exists here in Vancouver. And the taxi cabs here are unusually run by one ethnic demographic background is mostly Indo-Canadian, or we call the people from Indian descent, either born here or immigrated here, but mostly in the taxi business. They're also in the construction and in the transportation as well. But taxi cab is they're prominently controlling it, and they were able to single-handedly push back Uber for I think it was 6 years or something before Uber came here, and we were complaining. Everybody else anywhere else we traveled to, there was Uber. In Vancouver, there was still no Uber. We were stuck with cabs, which I have my own personal issues with. But how do you deal with, aside from a system that is archaic, how do you deal with groups that are going to push back and actually be a hindrance in your progress?
Yeah, it's such a good question. I mean, there's interesting, right? Because there's sort of like two. I guess I won't comment on Uber specifically because I think everyone kind of generally knows this story, so I probably can't add too much value to it. But I'll talk about like maybe broadly fintech right now. I don't think I'll be particularly controversial or partisan if I say that the Biden administration has been cracking down really hard on what I say the financial innovation space. And, it's your typical situation. I mean, it's a government, right, broadly, but, Biden administration is currently like the one kind of doing a lot of this enforcement. I think a lot of it maybe is just timing because the FTX blowups, have had like all the crypto blowups, right? And these are Ponzi schemes. People's, fortunes were, money was stolen from them, et cetera. So these are real big problems. But it's kind of a classic situation where on the run up, when everyone's going like clearly something's wrong, the government's sleeping at the wheel, and then after everything blows up, they step in and they just completely overreach. With the case in point being again like Gensler and like us still not having any clarity around what our securities, it's Ethereum security, like all this stuff, and some brave work being done by amazing American companies like Coinbase and Circle that are trying to truly create like innovation in this space and put America, I think, ahead of a lot of other countries around the world when it comes to like modern ways to move money in an efficient and cost-effective ways. So I think that's the tough one right now. And I don't think it's malicious. Again, it's just one of those things where the government tends to come in late and then just like hit everything, with a giant hammer. And it's usually about regulation, right? It's just like stop. Elizabeth Warren.
I hear you there.
Elizabeth Warren being the worst. Yeah.
Who's going to be your biggest enemy on RentApp? Aside from government, who's
not RentApp? I think you kind of nailed. I think if you take real estate, and let's go back to sellers for a second, right? Like, what's the problem in real estate? It's really title, and you're hearing a lot. By the way, being talked about that there is everyone's kind of talking about it. Like, hey, this has to end. I think there's something that came out yesterday actually where people were talking about actually putting in some new regulation that bans you from charging for title insurance. But yeah, the idea that we're charging thousands of dollars to basically get a piece of paper that says this house probably belongs to the person selling it is somewhat ludicrous.
No title insurance in Canada, by the way. There's no such thing in Canada.
Right. Well, and in Europe as well. But it's weird, right? It's one of those things. It's a consequence of those countries being much more centralized, which causes its own problems, going back to kind of the regulatory piece. So the title insurance is kind of like a consequence of United States being like conquered, going west, and systems kind of being built as the country was kind of growing early in the days, and decentralization in the United States is what makes it actually an incredibly vibrant place, the competition between the states. But within the title space, of course, there are huge players that lobby state and federal governments to maintain these crazy systems that cost homeowners, not banks, all the way up to 5%, of a transaction, which, by the way, you don't find out about until you're like closing, right? That's what's insane about it, right? You're like, oh, I thought I bought a house for $1 million. Like, no, it's going to be $1 million. There's 50K you have to generate because of like the 9 people that entered the room at the 11th hour in order to put some signatures. So that industry is massive and it doesn't want to go away. So, that's the chief. Yeah. You think about it, changing ownership of a piece of real estate. It's like, you've seen Excel, right? You just pick a cell, and then you just like you erase one person's name and you type in another person's name. Like, really?
Wish it was that easy.
Why does it take 30 days and $50,000?
Dollars to do that.
All right. So
Yeah.
last thing we want to touch on is
Yeah.
the ability to invest. I mean, we're excited to have you on our show at this point because I'm so excited about what, your great
Thank
mind
you.
and the companies you're building and what have you. And I'm really, really excited about it. But how are you currently funding your company? Can retail investors be involved? Is there do you have any plans to allow retail investors? There's some companies that even Elon Musk is involved. I think Boxable is one of them that retail investors can actually invest in. Talk to us about that whole side of things.
Did you like?
Yeah, I mean, unfortunately.
Go ahead, please.
Well, no, unfortunately, to some extent, like we're a pretty traditional kind of venture-backed companies. We have two, VC firms that are I knew the founders for some time, and so it's it's very much like a relationship I've cultivated over sort of like more than a decade. Where I said I want to build this company, I said, okay, Andrew, here's some money, go and do it. And again, it goes back to this. It's a very regulated space. There are companies out there that are built on top of things like AngelList, which I'm sure I'm a huge fan of AngelList, and that's a great example of like how you can build a company and make it like publicly accessible to retail investors. But also, I should say, it's not like you don't want to do it. It's not like you don't want to be able to raise money from the crowd, quote unquote. But the regulatory hurdles are insane. We didn't get a chance to talk about this much on, we didn't get a chance to talk about Cadre much. But going back to, again, Realty Shares, Realty Mogul, Fundrise, Cadre, it's not like they didn't want to have retail investors. It's just that the cost of operating a retail investment business from a regulatory oversight perspective is so prohibitive. And it's so complicated to set up those funds, and the reporting and the taxes are so complicated. You're basically incentivized not to do it. And so that's why you don't see a lot of participation from retail, into companies like ours. I mean, we'd love to have them.
Got it. Makes sense.
Okay. Yeah.
Makes sense. Okay, amazing. Let's move to. Thank you so much for sharing your story and everything else with us. Let's move to the second segment of our show.
All right, it's the 10 championship rounds to financial freedom. Okay, Andrew. So I'm going to ask you a series of questions.
I'm scared.
Whatever comes top of mind. Okay.
Okay. Sounds good.
All right. First, here we go. Let's do it. First question: who's been the most influential person in your life?
I think my first boss, probably. Yeah. Like I was very lucky. My first boss was great. And you kind of, it's when you're like in your late teens, early 20s, you're looking for direction. I had somebody that really believed in me.
Oh, amazing. Awesome.
Yeah, that's really great. Next question, Andrew. What's the number one book you would recommend?
Oof, number one book.
One of the good ones. Maybe it helped you in your journey.
Yeah, personal, whatever.
Help me on my journey. I tend to read, honestly, mostly the classics. I'm just gonna go with like Animal Farm. It's just like such powerful concepts and just so elegantly put together in a tiny book. Everyone should read it.
Yeah. Okay. Right on. Never heard of it before. Yeah. Okay, Andrew. Next question: if you had the opportunity to travel back in time, what advice would you give your younger self? Buy
real estate.
Great advice.
Nice. It's either that or buy Bitcoin.
Yeah.
Yeah.
Okay, next question. What's the best investment you've ever made?
Oh, I'm gonna be cheesy and say my children.
Okay, God bless. Nice. Or the investment you've made into those relationships you had, which now you brought on from those great
100%.
Companies into the company you built. That's if I see outside perspective. I think
the first thing that comes to mind is people. Like it's not. The assets are kind of secondary to the personal relationships, for sure.
100%.
Love that. Love that. Okay, now next question is: what's the worst investment you've ever made, and what lessons did you learn from it?
Worst investment, National Bank of Greece. Remember when Greece went under, and that bank was like trading for pennies, and like I actually bought a bunch, and it actually like it was like down 99%, and I bought it, and it went down another 99%.
Yeah, that was a.
For what it's worth, it was kind of it was a fun trade. It wasn't like
no, for sure.
The life savings. Yeah,
that was like the precursor to GFC, right? Isn't that what started?
I think it feels like it was the first. It was the original GameStop.
Yeah,
the Greek banks.
Right.
Yeah.
No, it was a precursor to the GFC. That's the first thing that went down. And then it was the euro. Yep, go ahead.
Nice, Andrew. Okay, next question. How much would you need in the bank to retire today? What's your number?
I think I know the answer because he's like a startup builder and those guys' brain never shuts off. So I don't know, but yeah.
Well, yeah, I don't know. It's interesting because it's somewhere around being able to well, not work so that you can think. And then once you thought of something, it's to be able to bootstrap it ideally, right? Because you lose most of that. If you're building a company, you lose most of that value in those early stages. So people that have enough money to bootstrap something are really, really, really well off. And there's great examples that I don't know. I don't think it takes much, to be honest with you. I'd say somewhere between $5 and $10 million, you can be very comfortable. And you can be generating more value out of that. Yeah.
Yeah. Look at the PayPal mafia, what they all did with their money, right?
Yeah, they all, I mean, Elon had hundreds of millions, but it's sort of like he put it into big ideas. But if you have $5 million lying around, you could start 5 things.
Right. Okay,
Yeah.
amazing. All right, Andrew, if you could have dinner with someone dead or alive, who would it be?
Oh, Freddie Mercury for sure.
Nice. All right. Awesome.
Okay, next question. If you weren't doing what you're doing today, what would you be doing now?
If I wasn't doing this, oh man, interesting. I kind of betrayed myself with the Freddie thing, but I've always loved music, so I'd probably love to play guitar or I go back to like being a designer. Real estate, like it's like kind of connecting it to. I love the idea of building houses and designing houses. It's just such a it's pure pleasure, right? Yeah, being able to live in the thing you designed is amazing. Yeah.
Yes.
That's actually what August did for 13 years. He
Oh, amazing. You're lucky. Okay, so maybe I'll get there one day. Yeah. Give me some time.
I just built a brand new house and we started dating and Ava came in and we got engaged and she moved in.
It's insane, right? Like just being able to go around and like pick just like custom build every corner. It's incredible. What compares to that?
I absolutely couldn't agree more. This is my favorite question, Andrew. Okay. Book
Awesome.
smarts,
Okay.
Book smarts or street smarts?
Street smarts, 100%.
Wow.
Okay.
Coming from an educated guy. Okay.
Yeah.
All right.
Love it.
No, I like books, but I've also met some incredible people that haven't read a single book in their entire life. So, yeah.
That were probably very successful, right? I mean.
Oh yeah, massively successful. Yeah, well, 100%. It's a thing. It's not like this. It's foundational. It's like a vertical. It's kind of like, giving first aid. You could be somebody that read a lot of books. It does not. It's one of the things. It doesn't make you. Yeah.
I think our 4-month-old has read about 100 books so far.
Incredible.
Read to him.
Yeah.
Okay.
No, it's great. It's great. It's great to read about other people's experience. That's why I like those types of books, but it's not. I don't think it's a requirement.
Yeah, I love that. We have tons of academics that come on our show, and they all say street smarts, and it's amazing to get the perspective from somebody who went to college and everything else. Last question. Here we go. If you had $1 million in cash and you had to make one investment today, what would it be?
Semiconductors.
Yeah. All right.
Yeah. It's just like, it's probably not something that it's not new. Everyone's been talking about semiconductors ever since NVIDIA went to where it is, but I think just the future is more semiconductors. And what I like about it is it's just both incredible growth, but also it's actually relatively safe because we're not going to need less of them. So it's kind of like, when people say invest in the S&P 500 and then like, you'll be fine. So the next step from that would be like invest in the NASDAQ and you'll be fine. I think semiconductors is like that next level, like invest in semiconductors, you'll be fine.
Oh, wow.
How do you invest into them? Is there like a fund that holds them in there or is it
there's a lot there's a lot of ETFs. Like I wouldn't bother like trying to pick like, oh, is it ARM or is it NVIDIA? Like, no, just like buy 10 semiconductor stocks through an ETF. You'll be fine.
Got it.
Like,
all right, I'm gonna
everyone should just like buy that for their kids and like just set it and forget it and look at that account again in 20 years. You'll be fine.
Okay.
There you go.
Okay, amazing.
Yeah.
Okay,
All right.
awesome, Andrew. This has been amazing. Just let everybody know that's listening. What's the best way that they can reach you?
Yeah, if somebody wants to
Yeah,
reach
I mean,
you or,
yeah, I'm
yeah.
on X, Twitter. Yeah, just I mean, you could pretty much Google just Andrew Borovsky. I think I come up. I'm on LinkedIn. Send me a message there. I don't have like any weird like LinkedIn blocks for people. I'm Andrew at rent.app, which is also to say, if you're paying or collecting rent, go to rent.app, learn more about what we do. Try the product; it's amazing. Yeah, and tell me about it once you try it.
Awesome. Awesome. Amazing. Thank you so much for being here. Thank you for sharing your wisdom and knowledge with us, and excited to see you grow. And you got to make one promise on camera that, when
Sure.
you go big, you got to come back on our show, man. When this thing goes huge. Okay.
Look, you guys are a 2-hour drive from me. I'll drive over there. We'll do it live.
Absolutely. Amazing. Amazing. 100%.
Cool. Awesome.
You have it on camera.
Thanks for having me, guys. Super
Absolutely.
fun.
Thank you for joining us for this episode. We hope this conversation enlightened you on how to win big in this highly profitable and risk-averse space. Get on your feet and embrace this world that offers so many opportunities just waiting for you out there. Continue your journey to becoming a savvy real estate expert by subscribing to the show at cpicapital.ca. Don't forget to leave a positive rating and share with your friends. See you on the next one.